Hey everybody, welcome back. Well, we made the higher high. Everyone's a little disappointed that we just didn't make another higher high, but this is usually what happens. You get that back off, right? And I wouldn't really sweat it. I'm going to leave this live so that we can talk about what's actually going on here. Thank you for the comments that this whole thing could be dark. I made the border dark. I do like using the app while I'm doing this. It would just make life a little bit easier. So you're going to see that level right there, that 53, 43, 25. And what are you doing? Just 11 o'clock on. You're just making what? You're just making lower highs. You had 4 Fed speakers today, guys. And you have to understand that their job apparently is just to keep contradicting each other. One saying one thing, one saying another, one saying rates are too high, one saying that they need to cut. It's kind of exhausting, quite frankly. And I've been trading 25 years. I've never seen anything like it. We've never really had hourly Fed speakers ever that I can even remember. It's just something I guess started with Powell. I'm not really sure that it was even like this, back in when he started, but it's sure like that now. And I'm not really sure why they're doing it, but nonetheless, it didn't used to be a spectator sport. You just used to do your job. But anyway, we're getting hourly updates on the economy nowadays, and it's affecting the market. And all these moves, when you start to see these big down moves, that's all these speakers, and that's what's doing it. This speaker's doing this, this speaker's doing that, and it's getting a little frustrating to people, and I think people just kind of walked away for the day. I know I'm very frustrated with it just because, again, it takes months for this stuff to hit the economy, and I don't know why they feel the need to speak all the time. But if you look at these levels, I would just watch this 53.10, and I would just watch down here this 53.03. And then if you break through that, then you're looking at 52.86, and then you're walking your way all the way down to 52.70. So, for those that are trading the futures markets, I would look at those. But more than that, if we just look at the market in and of itself, I don't know how you could really look at this and not be happy with the progress we made today or even yesterday. Now, if we take a look at the NQ, not really sure why it gave me that one, but if we take a look at the NQ here as well, we've been on a tear all week. We got through PPI and CPI unscathed. I'm not really going to sweat the fact that we just didn't have another day where we just went straight up. And what I would suggest to everybody, again, and please take this, as best you possibly can when I say it, you don't have $1.7 trillion behind you anymore. You're up, roughly from the open on Monday. Right now, you're up. The peak was 2.8% at one point, 2.9, and right now you're up 2%, 2.5% on the week. I mean, you've had a good week. You have to expect some kind of pullback. Now, you don't know when that pullback's going to be. So what I tend to do is go with it. I tend to continue to buy names into it. And then I'll just use tighter stops. And then when those stops are triggered, I'll just get out of the way. But I think it's worth noting a couple things. And I do want to focus on stocks tonight, very specific. And I want to get very specific with levels. I don't really view this as the end of the world for NVIDIA because we didn't go up a little higher. For once, you mean we didn't hit an all-time high close? So we're supposed to be concerned about that? I have a real tough time saying that, right? Now, could you go sideways here until this happens? Absolutely. A great example of this is until earnings next week, but a great example of this is AVGO. If you look at this chart, am I supposed to be upset because we made an all-time high today, but then we just didn't close over it? And the answer is, of course not. So when you're looking at this and you're evaluating what's actually going on, I would take a step back unless you're day trading. If you're day trading, it's a completely different story. If you're buying, zero-dated options or you're day trading, that is a completely different gambit. And that's one that you need to look at. But I would argue that what we're seeing here is extremely healthy behavior. Now, you look at the SOX, again, rallies up higher highs, sells down end of day. Why is that? Well, AMAT. And when AMAT pulled back, hit that higher high, made a new high. And then if you look at this, just to be clear again, we're at all-time highs on AMAT, and we're down a little bit by $2 after hours. Now, at the time of recording this, and this is why I want to spend some time on the names, and then we're going to get into some of the internals, they beat. The guidance was in line to up. Now, maybe that's not enough for an all-time high, but that doesn't mean you're going to fall apart. Where I see people struggling, and I'm just going to get this out there, is expecting the same thing on every rally they saw back in 2020. That's not the market you're in. So they're expecting these huge breakouts all the time. It's not going to work that way, because you don't have the same money behind you. So you have to understand that, right? But you can't be looking at AMAT, and you cannot be looking at NVIDIA, and you certainly can't be looking at the SOX and saying, oh, we're going to crash. I mean, I don't even know how you could think that this could possibly be ending and not starting after what you went through. And I'll say that again, I don't know how you could look at this and think that it's going to just miraculously end. And we just went through exactly what you needed to see as far as a test with the semiconductor index, where we broke, tried to rally, couldn't make the lower low, and then rallied back up. That's exactly what you wanted to see. And we saw that exactly with the Qs too. You broke, you tried to rally, you failed the rally, you had to push a higher high or make a lower low. You made a higher high, you hit all-time highs. If your trades didn't work today, then your trades didn't work today. That means one of two things. You either entered wrong, or we either entered wrong, or you didn't honor your process. And that's what you need to be aware of. Are you honoring your process? So, and I want to get this out there because I'm seeing it a lot. And I'm seeing it in the questions. For example, we have SMCI that we bought in the room. We paid $8.50 for it. The other day, we're at up 100 points. Up 50, trim, up 100, trim, hits a new high today. When it hit this high, I actually saw something on a 1 minute and I did this trade. I'm going to just show it to you very quickly. Well, once it broke out, I'm going to go to a pre and a post here because this is the kind of stuff that you have to understand. This is what you're dealing with right now. And it's really important to get this. So you have your support and resistance levels, and then you're watching them gap down. You're watching the retests. Watch your retests on when you gap down because you're seeing this a lot. And if you push, that's where you want to be. So once I did that, I pointed out in the live today that I had a lot of this on, so I didn't add to it. But I pointed out here, like, hey, you made a decision right here. You're probably going to gap fill. A bunch of people did it in the room. Once we did this and retested, and I saw we were going to hold that, I'm like, okay, there's money here. So I bought this trade. But I knew that this was just a singular trade for me, meaning get what I can, get out of the way, made $6 or $7, and then I just moved on with my life, right? I still have the core position, but this is really important for you to understand. When you're in this, and what I am currently in this trade, let me be really clear about that. When you're in this, you must understand why you're in it. You must understand where your stop is. And so when you're trading up and things are going in your favor, you're pulling money out. So if you're pulling money out here and you're doing little day trades here to add to it, then this is just consolidation and your first failure over a 55-day moving average. It's not the end of the world. If you're buying calls into the breakout and you're still in them and you're hoping and praying, you have a problem. That's not a process. That's a prayer. There's a difference. And so you need to understand that, right? So if I look at this bar and just devil's advocate, understand, because people say, okay, well, how do you know you're wrong? There's two ways that you're going to know you're wrong, right? And you're going to want to remember this. Number one, if you take out the lower low on the day, you might have a problem, okay? And if you break 900, you might have a problem. If you take out this low, you have a problem, right? They're the areas that you really want to look at, but that would be where it would be. So then you have to quantify what your risk is and then make that decision. I hope that's helpful. I really want to get that out there so that people understand the best way for them to kind of control their risk in this environment. If you look at this market consistently, you will see the same thing over and over again. All of these pushes, they all end the same way. It doesn't matter where you are in the chart. And the reason is, this is where retail's buying. Make sure you watch Saturday's video too. We're going to go over smart money, dumb money, and there's some other things we have to cover, but smart money, dumb money is fascinating this week. But if you take a look at this, how did these rallies go? How did every higher high go? It didn't. So why would you think this one's going to work, right? What you're looking for is you're looking for the turn. You're getting in on the turn, you're making money, and then you're consolidating, and you're looking for this to start forming a cup and possibly head higher. And you're trying to do this into something like NVIDIA's earnings, right? Same thing when you look at something like, when you look at AVGO and you look at that, you're trying to do it into the earnings. So again, hitting all-time highs, markets hitting all-time highs. If your trades aren't working, it's possible that your timing is off. Not that the trade's not going to work. There's a significant difference between the trade not working and the management of you and the way that you're managing that trade. I hope that's clear. Let's get into some of these internals so that this can benefit you tomorrow. A couple of things before we get into the internals I want to go over. If you're looking at Bitcoin and you're watching how we're holding here, we are holding. We just went sideways. Nothing's really changed, and I do want to address this because I think it's pertinent. And I want to go through a couple things. If you take a look at Bitcoin and how you're just sitting here, all you're doing is holding there. And a lot of people are going to look at the MSTR, which quite frankly, to me, did not break down. All you did was go sideways and you're still above the 55-day. Where we're seeing the issue for me and where you could see a major problem here is the news on coin. And I want to get this out there because when I read this, it's pretty significant news, and there's a reason why it dropped 15, 18 points from the high today. I believe it was 218 at the high, 216 and a half. And I want to get this out there so you're aware of this tomorrow. If you're like, oh, this looks cheap. CME is going to begin trading actual Bitcoin. Once CME begins trading actual Bitcoin, institutions are not going to Coinbase. Institutions are going to take that transaction, and they're going to do it at CME where they already have relationships. And they understand that they're not going to have the same counterparty risk at CME that they're going to have through Coinbase. They're just going to trade there. So that is really going to be damaging to the institutional sponsorship or the building that Coin was trying to do on the institutional side, right? Coin has nothing to offer anyone that's trying to trade Bitcoin that's an institution that CME is not going to have. I mean, the cost will be cheaper. Everything will be cheaper. This is a real issue. I missed it earlier this morning. Someone posted it in our, like, we have a crypto room in there where the guys talk all the crypto stuff. I'm a boomer. I'm hardly ever in there. But it was really interesting when I read the post, because it's a real, people don't get this. It's a real problem. And if you remember, just I want to get this out there too, when Bitcoin rallied, you'll remember this, or you might not remember this, but the first time Bitcoin ever had a real problem, like a real problem back here, is when you were in a position where the SIBO started being able to trade some level of futures on it. And that marked a high. So this is going to be really interesting to see how this plays out for Bitcoin, because now it's not going to be in everybody's hands anymore. It's going to be in the hands of the Chicago Mercantile Exchange, which is kind of fascinating. I think it's fascinating. But also, coin, you need to watch this and you need to pay attention. You need to pay attention to this. As an investor, there are two things you must watch. Number one, you must watch what's going on here with the dollar. You need to just pay attention to this. Make sure you're staying below the 55. You want to make sure that happens. Number two, you want to watch the 10-year. Make sure the 10-year is staying below your 55. That's what you need to see. As long as we can see that, we're in decent shape, and that's what I want to focus on. They're the two things that, as an investor, that you must focus on. Now, just as a reminder, you have some big earnings next week, so you're going to want to watch Palo Alto. You will all know that NVIDIA has earnings next week as well. And earnings tonight that I thought was interesting, just the reaction to the earnings for me. This TTWO, I'm not really sure that this was that bad, and you might want to look at this. I understand the AMAT, maybe it did knock the cover off the ball, but they're dragging out this Grand Theft Auto. I guess they're on Grand Theft Auto 48 or whatever you crazy kids are playing nowadays. But just be aware of this. I don't think it was that bad. Now, in one of my groups, I have all these in here, and you might want to follow me on here because I do post a lot of this stuff on the scripts and things like that. But I want to get into some of this because I think it's pertinent. So if we go here, I'm just going to click the change button for a second. I'm going to leave this on for a second. Okay, it was a broad-based sell-off. These are all your sectors that are out there. It was broad-based. All right, all that happened was that you sold down after a rally. So if you look at these and you go through the indexes, like you look at the consumer, let me just pick them randomly, right? And you look at the industrials or you look at energy, like these are not the end of the world. We just really went sideways. You know, you're watching the XLV spike. You're seeing real estate move higher, even XBI setting up. They're all above their 55. So you have institutional support out there. They're hitting new highs. You know, even XLP, the whole sector is moving. So I don't really think that we're in a position here to suggest like, oh, it's just the healthcare. Yeah, all right, maybe healthcare and XLP broke out today a little bit, but I don't think it's that bad of a thing to see that kind of move. What I would argue is I would look at some of these internals. So now in front of us is the 5-day average, S5FD. And I want you guys to do me a favor. So I'm learning what frames per second is. And what I'm doing in here, I sped up the frames per second. So just let me know if this part of the video is smoother or if you notice any difference. I'm curious if you're gonna notice anything. I'm learning as we go, guys. So the better I get with this stuff, the cleaner it is. Anyway, and I appreciate the tips. Please keep them coming with the audio and video. It is absolutely huge, and people definitely notice the audio, so I appreciate you saying something. Now, in regards to S5FD, where are we? Well, here's the 50. Here's the 65.4, right? 65.40. So you're about 65% of all the names are at the 5-day moving average. Well, that's good. Then we go to the 20-day S5TW. These are, you can just go right on TradingView and get these. Well, we're back to that level where it's kind of like overbought, isn't it? So that's definitely something we want to pay attention to, right? So we're a little overbought on the 5 and we're a little overbought here. But that's okay, because if we look at the 200-day, we're very healthy up here. This in the past has been a level of resistance, but quite frankly, it's turning into a level of support where it's just normal for all the stocks to be above the 80. Quite frankly, it's healthy to be up here. And you will see like the bumps in the road from when you have the blowups. And you always want to look at the trough valuations, which is, you know, when you're down to like that 10% level, that's usually a bottom down here. And you can see that very clearly. You know, when you have those fallouts, this is what you're looking for those fallouts. But, you know, you're not at a level here where you would say it's crazy, right? You're not up here where 100% of all stocks are above. But if we go here and we look at that level on the 200-day, yeah, you could stay up here for months, years up here, and it's not that big of a deal. It's not frothy, right? We would say if every stock is above their 200-day, that might be a level of froth. And then, of course, you always use the 50-day and you want to see what's going on. Now, levels of froth to me are anything where you have 90 or 95% right up here. That's a frothy kind of level, and they usually end in tears eventually. But where we're at, we don't really want to be less than 50. You want half the names, which is healthy, to be above. And when you get to those trough levels, Those trough levels are really around that 7. This is S5, FI. So these are good, solid levels and good, solid readings. And we're not up here at extreme readings. So what does all this mean? It means that you're at a level where you're maybe you got a little ahead of yourself, and maybe you push tomorrow, maybe you don't. And if you didn't, you would know why. But you're far from overbought on the stocks above the 50-day, and the 200-day is not frothy. So we would say short-term overbought, long-term we're seeing stability across the indexes in the internals. Let's take a look at new highs, new lows. Now in front of us are the NASDAQ, and these are the new highs, new lows, just for the NASDAQ. And the new highs are in white, and then red, we have the new lows. Okay. What are we saying? Are we seeing anything that we would have to concern ourselves with? Can we say we should be concerned because the new highs peaked and then dropped off today? Is that something that we have to concern ourselves with? If we start getting into those kinds of semantics and these little pullbacks, it's going to be really kind of exhausting. What we're looking for are major trends. And right now, major trend-wise, what do we see? We see a lot of growth from where we've been. You can see the peak here. You can see how it started turning from those new lows. Now, if we start turning red again, yeah, that's something to be concerned about. But take a look at the NASDAQ and now compare this to what we see with the S&P. Now, this is where it gets interesting. Look at the S&P and look what's going on there. New highs versus new lows. It's a no-brainer, right? So when we're understanding the internals of the market, we have to ask ourselves when we're making decisions about what's going on in the market. I'm seeing this a lot. That's why I'm bringing it up, guys. And please comment, as always, on the frames per second, because I'm really curious about this. It looks like it flipped back to 30 there. So you're going to be able to tell between 60 and 30 for me there, and let me know if there's a difference. And it would help me if you do that, because if it makes it clearer or makes it better presentation, I'd like to know. Anyway, look at what's going on here. This is definitely something that we have to pay attention to, right? Why do we need to pay attention to this? Because the internals are telling you that we're going higher. So if the internals are telling you you're going higher and that there's more buying going out there, maybe we should just listen to what the market is telling us versus us telling the market what it's going to do.